Hey, Eric here from 5minuteinvesting.com. And my mission is to help people without financial background to master investing and get 30% from the market. So today, I just want to use this video to talk about investment return. Now, if you are thinking that you're getting a good return, you're getting a low return, or you're not even sure what your return is, that's what this video is about. And I feel like there's a lot of confusion, noise, news in the market about what is a good return, and people are basically saying that they have a good return when in fact it's pretty average. So in this video, I'm going to cover a couple of simple tricks for you, so then you know how to find out whether the return you're getting is reasonable or not. Okay, so I'm just going to minimize my screen here and I'll move it to this side. And this is really the article that kind of prompted me that, oh, okay, Eric, you got to make this video. The title for this article is Machine Learning Hedge Fund Returned 7% in 2019. And, you know, Volon Group, one of the best-known machine learning hedge fund, returned 7% in its flagship strategy after drawing inflows on a back of a stellar performance in 2018. Now, this is actually quite interesting because, you know, as an investor, you're always looking for the next big thing, and within this sentence alone, there are a lot of sexy words: machine learning, hedge fund, stellar performance, 7% in 2019. So, you know, as an intelligent investor, you're going to be asking, well, is this a good return? Like, is this something that I should be proud of? Should I look into this? Or is it just all right? Now, if you have, known me for a while, you probably heard me saying something like, the average return from the stock market is 7% year over year. So if you invest in any ETF funds, index funds, you should at least expect to get 7%. So using that as a benchmark, this is really an average return, but for 2019, it is actually especially a good year. So is it really a good return? So let's find out. So the first thing I would do is actually to check the return for S&P 500 in 2019. Now this is probably the easiest thing you can do, and all you have to do is to type into Google S&P 500 in 2019. And here you're going to find the first results. And it says the return is 30% in 2019. So that's actually quite high, and that actually outperforms the historical average by approximately 5 to 4 times. So if you look at S&P 500 and imagine you are on January 1st, 2019, and you didn't do anything other than invest in the index itself, you would have gotten 30%. Now compare that to a sexy hedge fund that uses machine learning, only getting 7%, then is not very, very impressive. Now, here is actually another interesting sentence. Volon Group gained 14% in 2018. So if you look at S&P 500, there's actually a negative return for 2018. So in that case, that is good. So depending on what you're looking at, sometimes you're going to get a negative return. But then in this case, this says 6.59. And I actually have a chart here that says for 2018, the return is negative 6.24. So this just goes to show that you need to compare the performance between S&P 500 and the mutual fund return. And you can see that obviously they did not make that comparison between the Volon Group 7% return with this year's S&P 500, which is 30% this year. So yeah, the first question we kind of got an answer is that this is not exactly a fantastic return when the market is doing so well. So then the next question is, well, what are the mutual funds doing? How are other mutual funds doing? So then for that, I actually found mutualfunds.com, where you can look at Canadian equity funds, or you can search US if you want to. And I scroll down here, and it's actually very convenient that there's a 1-year return for these mutual funds, and I just sorted it. So the best mutual funds in Canada, you can do it for US if you want to, has 36% return for the last year. 36, 35, 35, 34, and then 17. Okay, so then that means for a Canadian fund, a mutual fund, this is probably like a equity balance fund with no leverage. They can get around 30%, which is slightly higher than the S&P 500. So that is good. But if S&P 500 is going up by 30%, you shouldn't expect a mutual fund to be too far off. Maybe, a couple of percentage higher or lower in this case. So now we covered two strategies. The machine learning one, which actually a lot of people are excited about, robot advisor, using a machine algorithm to automatically select stocks for you, but in the end, you're only getting 7%. Or you're going to select an equity fund, which there's a professional money manager to handle your money, and they charge around 1% in terms of transaction costs. And then you have the extreme. And this is a fantastic example of Bill Ackman's hedge fund deliver 58% return in 2019. And this is really almost double of S&P 500. And I think that is fantastic that Bill Ackman has did that. And he has been on the news in January for quite a while, so you're going to see his face all over the place. But what's interesting is that for his return, he actually had 3 years of negative return, and then now it rebounded in 2019. So in order to truly see his return, you need to look at the last 4 years together. So basically a return over a long period of time. So just to give you a feeling of, what does 58% mean? 58% is actually a very, very high return in the investment world. So for myself, this is my return page. You're going to see that my annualized return is actually close to that range at 54%. And I emphasize this many times. When you invest in the market, it is best to target 30% a year. And obviously in the last couple of years, the market has been performing quite well. So my annualized return for the last 4 years, from 2016 to 2019, is 54% a year. So the cumulative return in this case is 457% return, which is quite good in my opinion. So you need to look at 4 years, right? Because if you just look at 1 year, you're going to see this is 7%, and then afterwards last year was 14%. If you look at S&P 500, it was 30% this year, but then last year it was -6%. If you look at the top equity funds in Canada, this year is only slightly higher than S&P 500. So then you can kind of assume that, okay, last year is probably almost the same as S&P 500. And really, I found this chart online called S&P 500 Historical Annual Return. So you can see here, you need to look at the return over a period of time, like 4 years. The longer, the better. But then, of course, whenever you're comparing between funds and strategies and so on, you need to compare it with S&P 500 and compare against each other during the same period of time. So in this case here, it says 28.88% for 2019. So you need to compare that with what this Volion group is doing, which is 7%, so they underperformed. Compared to what Bill Ackman is doing, 58%, so he overperformed, which is fantastic. Compared to what I'm doing, 54%, so I'm overperforming as well, and so on. So for example, you need to look at what's happening in 2018 as well. So in 2018, it was -6%. Now, for Volion Group, it was +14%, so that is fantastic. For Bill Ackman, he said net negative return for the last 3 years, so we can probably assume that it is the negative return in 2018. And for myself, during 2018, I think I was positive around 7% that year. So when you're looking at that, and across 4 years, I think S&P 500, the return is approximately 40 to 50% over this period of time. So the cumulative return here is around 40, 50%. I couldn't find a chart to support it because I think I saw this piece of data earlier. But essentially what you're looking for is really the year open here, 2012.66, compared to the year close, which is 3230. So I'm just going to do the calculation here for you right now. Divided by 2012. So that is a 60.5% return across 4 years for S&P 500. So then when you compare that to my return 450, then you can obviously see the difference between just investing in an index fund versus investing using long-term stock options. So that's kind of what I do. So that's really it for this video. I just want to give you an understanding on when you are reading news, seeing someone getting a good return, you always need to collaborate. You need to look at other people's return. You need to look at S&P 500 return to truly think for yourself to determine whether that's a good return or not. So that is probably one of the most important lessons, because people get deceived all the time on the amount of return other people are getting, and then they think grass is greener on the other side, when in fact you actually need to think through what is a good return. So for example, Bill Ackman here, the return is fantastic, but it's not across all 4 years. Here my return is actually across all 4 years, and the cumulative return is this much compared to S&P 500, which is approximately 60% cumulative for the last 4 years. So in the next video, I'm actually going to dive a little bit into the investing psychology between gambling and investing. And I'm also going to tell you a story about one of my subscribers that I recently talked to. So that is what's coming up next. So if you like this video, please click like, subscribe, and leave a comment below. I'm trying to grow my YouTube channel so I can help more people around the world to master investing without financial background and target 30% a year. If you are interested in learning more about my investing strategy, then you can click on the first link below. That will take you to my website, 5minuteinvesting.com/free case study, where you can attend a free webinar and learn more about my investing approach. And if you are interested in getting coaching from me, I do offer one single coaching program that teaches you from beginning to end how to invest exactly like I do. So that is pretty much it for this video. Thank you very much for watching, and I really appreciate your time for watching this video. I'll see you in the next one.